All right, we are back. It's Wednesday, time for the last live trading room of the week, and I'm joined here by Victor today. Alex is nowhere to be seen. How's it doing? How's it going, Victor?
I'm fine, thank you. I'm excited to be part of the session today. How is everyone doing?
It's going to be a good one. It's going to be a good one for sure. So what we're going to do here today, and guys, let us know in the comments if you are, we got CPI coming up in, I believe, 30 minutes. So let us know if you are trading CPI. Probably a good idea not to trade it, but we're, of course, going to be monitoring the reactions on the CPI here live today. And so the process here is I'm going to start by going through a couple of charts. I want to look at gold. I want to look at the S&P 500. I want to look at Euro USD to kind of give you guys my my overview of what I think the technicals are telling us here prior to the CPI. And guys, don't forget to hit that like the video, and make sure you are already subscribed to the channel. I'm pretty sure that we have a setting which, so if you want to be commenting, you need to be subscribed to the channel. Lots of people watching today. I love it. Very, very active in the comments. So keep that up. Okay, so again, if you have any questions, anything you want us to look at, let us know. But I'm first going to look at a couple of charts, and then I'm going to give the stage to Victor, and he's going to talk about his trading strategy. So it's going to be like about an hour of Victor talking about his trading strategy. I'm probably going to ask a lot of questions, and if you have any questions, make sure that you ask them as well. After that hour, I will do a presentation on trading psychology. So it's going to be a very insightful webinar with two main segments in this live here today. All right, so let me first break it down. So the first thing I want to look at is GBP US USD. So where is Alex? I believe Alex is having some connectivity issues with his internet, so he'll be here as soon as that's all figured out. All right, so we had a trade this morning. So right when I woke up, actually, not when I woke up, but I had left my was going to leave my kids at the bus or walk to the bus. It doesn't really matter. But early in the morning, Alex sent me a message saying you, and apparently that dude is watching the charts every hour of the day. So early hours, he sent me a message. Look at GU. Do we have a potential long? And I said, well, if we have a break and retest of this area, then absolutely, I think we do have a long on GU. So let me break this down for you guys, because this is something that I showed you guys yesterday, where I said, you know what, if we do get a move, we hit resistance here, we might get a move down to this level. We're retesting a high time frame support here on the 4 hour. What's up, Alex? Welcome. How you doing? Where were you?
Thank you very much. I was just on a quick call.
Right.
What have I missed?
But I love it. Nothing. I'm just talking about the fact that you're apparently watching the screens at all hours of the day, and you sent me a message very early in the morning about GU, and I'm trying breaking down the idea that I had here on GU. So we had to move down to a support level here on the 4 hour. I switched to 1 hour, and what we saw here on the 1 hour is a decent bounce here, but then we ran into resistance right here. So going into the 15-minute, that resistance area becomes even clearer. And then at the highs here, we have a 4 hour level. And the general idea here was basically to go in on a break and retest of this level. And I wanted to wait for a 1 hour candle to close above the level. And then after that candle, no worries, man. Good that you're adding your screens, because you probably want to break this down as well, perhaps. So yeah, the 1 hour candle closed right here, and I basically placed my entry in the middle of that zone, stop loss well below the 1 hour candle, and TP. I basically just wanted to get a quick 2R here up to that level. Now my initial TP was actually all the way up here, and that would obviously have been quite the successful trade if I hit it all the way up here. That would be 8R, but then again we have CPI coming out in about 25 minutes, which means lots of risk. So for me to be able to get quick in and out 2R in a day, before CPI, that's a big win for me, because usually I don't really want to trade CPI news days. So that's the trade we took today. I had another idea on GBP CAD that I kind of want to break down for you guys as well. So here you see on the 4 hour, and this is the same. This is the one I showed you. I talked about yesterday as well, where I said, we're now inside this area. We're hitting that weekly level. You can go out to the daily. We see that we have a daily breakout. We're retesting the weekly level on the 4 hour here. Very simple break and retest. And when adding the fibs, you'll see that the retest happens inside that reload zone. When we had that hit of the reload zone, looking pretty good, right? And when we're inside that reload zone, what we see here is a downtrend, right? But that's a higher low. So we go down to the 15-minute, and here again we see a clear, almost like a W structure, with the right leg being higher than the left one, and a clear horizontal level. I'm basically looking for an SR flip here, support and resistance flip. I want to get filled here for that long, stop loss below the lows, and then just take this up to a decent level, trying to get above 2R. Now, you look at that wick right there. Obviously, I missed the entry on this one, but the idea was basically the same as the GBP USD trade.
What does that look like on the 5-minute? If you go into the 5-minute on that chart, would you have got an entry?
No, but look at GU though. Look at GU. The 5-minute.
GU is perfect.
Yeah, that was perfect. Look at that.
That's what
that is picture. Yeah, I mean, that is picture perfect right there. So on this one, could have even gotten in so this picture perfect on the 5-minute right there. I want to show you a trade that I'm in right at this very moment. It's a very low risk trade. Not really sure why I entered this one. Well, I know, of course, why I entered this one.
100%. This is the 100% discretionary model.
Yeah.
Okay?
So it's a short on EU, and I entered it close to starting the live stream. And basically, this is just I'm hoping that the CPI numbers comes out and the EU will react to this major resistance zone. I'm seeing a lot of people talking about going long on EU. Obviously, not this guy, because this guy is on my side. And let's go. GU and EU all going down. That's what I think is going to happen, right? And I see a lot of people being long EU. They're talking about this break and retest right here. Like you have a low time frame breakout here, and how it's going to just go straight up. I'm thinking that we're testing a major resistance area in a range. So we're testing the range EQ here. Go out to the weekly. Now, what level do you think that wick hit? All right. So if you've been watching these live streams for a while, you know that there's one specific fib level that I like to watch. Alex, which fib do you think this one hit?
Don't know, mate. Don't know the answer.
Victor, come on, man. The magical fib.
Reload zone.
60.18 something.
Yeah.
61.
So the 0.618. We add from the high to the low, extend that fib, and we'll see what level does that wick hit. The 0.618 confluent with that high time frame level, which is basically visible on all time frames. I'm thinking that the CPI news comes out, and we're I don't know what's going to happen, but I'm betting that we're going to get a move to the downside. And watching
should we have another bet?
This one is not. I don't know, man, because I'm not very confident in this one.
The week is not over yet.
Oh god.
Let's wait 20 minutes and we'll see. If you have Guys, before we move on to Victor's going to share some insight into his trading strategy in just a bit. By the way, like the video. I see there's a lot of people watching who haven't liked the video. You like the video, and that will determine the number of giveaways, accounts that we're going to give away later in the live stream. And also, a token of appreciation, hit that like button. It's a small gesture from you guys, but it means the world to us, because it will activate the YouTube algo, get more people in here, more people to join the 5ers family. Okay, so there's two more shots I want to look at: gold and S&P 500. We looked at EU. I think EU is going lower. Why do I think that? Because I'd like to use that resistance. That's basically it. Very simple. Gold, what are we seeing on gold? I'm actually seeing the signs are not here yet, but there's change of structure in this trend. There's definitely a sign of momentum slowing down. We have what I would say is the first double top in this trend. We can look at the behavior of the trend, right? So we have a high, 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 low, 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 high, high, and then lows, and high and low, and a lower high. I would look at that as a lower high or equal lows. And obviously, it seems like this whole area is a major resistance area right now. And if we go down to the lower time frames, it's not really showing the structure that we saw previously. So I think that we might get something like this on gold. And if that happens, you gold traders out there, if any one of you likes to look at a swing trade, now look at this level below here. Now, if there is a strong risk of sentiment, if there's like a, I don't know, like I don't know if I have that agrees to gold, but if gold breaks this level to the downside, we do have on the daily a big level down here. Now, you might look at this and you're biased on the upside and say like, no way, gold is never going to touch this level again. But there's, of course, a high probability that it will. So a break and retest of this level, if that confirms a possible swing trade all the way down here, makes sense to me from at least a technical perspective. So if we can find something similar on the S&P 500, okay? So we look at the S&P 500. This is on the daily, and you can clearly see that there's a change of structure here. This was the dominant trend right here. What we're seeing now is a new structure. We're no longer in the previous uptrend. We're no longer in the uptrend that started in the beginning of this year and ended basically this month. So from a technical perspective, you can look at this and say we now have potentially a downtrend forming. That downtrend might look something like this. So we have interesting change of structure in the S&P 500 and Euro USD. Okay, so with this in mind, we have a potential structure change in structure. I'm short the EU. That's what it all boils down to. So if you guys, I mean, I would be very much appreciated if you guys could just go into MetaTrader and short EU. No, not financial advice though. Like if you want to get wrecked, probably.
Yeah, hold on. Wait. Okay.
But instead, like we have the risk disclosure in that banner as well.
Yeah.
It's
EU looks like it's going up.
What's going on?
I agree.
I look at EU going up. I actually had a little bit of lapse in psychology today. And I did say to you, I remember saying to you guys in the WhatsApp group, I'm trying not to prematurely close my long. And it got to me. The numbers kind of got to me because originally I was only risking 1R and I had a really tight stop. So I had around about 20 lots, which I was fine with. And then Jonathan said I should add more. So I added more, and I had an extra. So I had about 30 lots in, and I was up. I was up quite a lot, and I did see some little pullbacks, and they're little pullbacks, and I did prematurely close my trade. So now I look back, and
oh
if I
man,
just
look
set
at
and forget. It would have been totally fine. I'll actually show where I got out. And it's kind of annoying. So this was the target. And there you go. It would have hit the target. and these were the trades. Now, when we came in, we were looking at this area. I got in a bit of an aggressive trade here because I was like, okay, this is pushed up. It's found this is where I'm going to get in for my first position. I did get stopped out very quickly because the price came down, stopped everybody out, took liquidity, and carried on. But as soon as it took liquidity, I entered in another trade. It pushed up. Then we actually got the proper retest. You can't really see, but you can see here. So it pushed up above the range. Then we get the proper retest. So that's where I bought my second lot of trades. And then when we saw this consolidation on the 21, and Jonathan was like, add more. I decided it's a good trade, so I'm going to add more. It got to this price action here, and it was just, it didn't look too powerful on the 5 minute. And maybe I was in too zoomed in. Maybe if I just pulled out just a little bit, maybe I would have been better. But once I saw kind of this price action here in this consolidation, I was like, you know what? No, I'm gonna close. I'm gonna close 60% of the position and keep the rest. And I actually got out again at this area here, which was just 6 points away from my TP. So if I would have just left it and done it, just set and forget, like I said, then I would have been up a lot more on the day. But overall, the trade idea was good. Just the micromanagement of the trade was bad, and I think it's because I let the numbers get to me a bit. But there you go. Yeah,
Very
not
good.
one at a time. Yeah, you know, not everybody at the same time, guys. Okay, calm down. Just very quiet. But,
Now, I just
I
read this
would show
comment. Yesterday, 5ers value gap held, Alex, and that's right. And I actually checked the statistics of this, but it's actually true. The 5ers value gap has a close to 99.9% win rate. So definitely worth checking that one. I checked the live stream yesterday.
As you know, because we had a conversation after the stream, didn't we, yesterday? And I was just looking at it. I was like, as if I've just closed that trade, because it was absolute. What's going on with? Because it's what's it doing? Because it absolutely dumped. So we first tried to get into the trade here because I could see price was struggling to get over to make a higher high. So I got into the first trade here, got stopped out. Then we finally found the weakness, and we finally found the drop. The reason why I decided to get back in was because we this time we had a break of structure. Here we didn't exactly have a break of structure. It was me getting into the trade a little bit too aggressively, a little bit too early. But once we had this move here, that was the break of structure. So as soon as I saw that, that's when we sold. We had a retest of this area, which was the 50 fib. And we took it there to the 200 EMA. But look at the rest of it, you know. That was quite a little bit left.
That trade you took was very. I saw the first entry, and I wouldn't have entered there according to my plan. But the second one was. The add-on was golden. I mean, how much?
Yeah.
You didn't have any drawdown at all, almost, right?
Yeah, it was literally what we had, you know, like $150 drawdown, so like a pip and a half, and then it just it just tanked. But there's got to be.
All right, guys. So what we're I shouldn't be talking and writing at the same time. But I did, and it actually worked great this time. Okay, so yes, what we're saying. Yeah, so okay, so we got CPI right now. So we got CPI in 10 minutes. So what we're going to do is we're going to wait for the CPI. We're going to wait for the numbers. We're going to look at EU, probably stop me out before going to profits. And then we are going to go over to... we're going to look at Victor. So let's wait for the CPI news to come out. We're going to see what price is doing here live, and then Victor got about 30 minutes to go through his system, and after that I'll go through my trading psychology presentation that I got prepared for you guys. So looking at, we have one, we had someone asking about what is a fiver's value. Yeah, that's that's a good question. We're
Should we find a
working on
fiver's value gap? I've found a fiver's value gap. Okay.
yeah, fiver's
So
value gap
guys,
is
this-
a fair. Is it fair to say that it's a fairer value gap?
no, this is a fairer value gap. This is the FVG, the fiver's fair. No, it's not. Yeah, the fiver's fair value gap.
Fiver's fair value gap. So basically,
FVG.
if an outside bar is a bullish engulfing on steroids, then a fiver's value gap.
We
is a
didn't
fair
we
value
didn't
gap
take
on
this
steroids.
from our we didn't take this from ICT. This is something that we found out the other day. We found out this yesterday. This is the fiver's value gap.
Oh yeah, has nothing to do with the ICT at all.
Nothing.
I closed my
okay,
position,
so-
guys. I haven't explained my setups, which I
Jump
will
on it.
later on. But I just closed my position, and I'm gonna show my screen right now. You can see these are my entries that I had this morning,
Ooh.
and that
Ooh.
is my close. Right?
Is it on GU? Do you want to come in further so we can see it?
Well, yes, I will show. I will break this down, the setup, why I entered. Of course, I when I saw you were going along, I saw the same thing, that we had this potential to go much higher. That the
Oh,
setup
got
was
got out right now. Wow.
yes,
you
yes,
read that
but
off.
that's because of CPI. I didn't want to take the risk. It's good profit, and
Nice.
normally I would have closed a portion of my position before that news, but I didn't give me that chance. My first my TP1 was a little bit higher, and it hasn't been hit yet. It was something a few pips higher, about 5 pips higher than that high. But I think
Nice.
this is good enough, and these moments like this, I prefer to not catch the whole move, but be comfortable. And CPI coming in,
Yeah.
I'm comfortable, I'm leveled psychologically, I can take another trade, doing right decisions. But if I let's say this wicks me out, because high impact news can do that, perhaps my next setup, I will not be, I'm not gonna be in balance, perhaps, or it's gonna affect me. It has a potential of affecting me. So knowing that, I prefer taking this profit. And I was thinking of leaving something on, but in the end I didn't. That's a little discretion in there, but that's what I wanted to show. Now it's continuing. Actually, I see it going all the way to 27, between 30 to 27.20, 27.30. We'll have to see. It depends on the CPI, of course. But yeah, that's what I wanted to share.
The
before you
4 hour
continue,
market
Jonathan.
structure on this, the 4 hour market structure on this was fantastic. Like, absolutely beautiful. Like, if we just removed, got a little bit further out, this could have been traded all the way from here to where it's at now. Just simply the same thing that we do on the lower time frames. We could have just done it on this time frame, But then again, the targets on this for a swing are very high up. The targets for this we would have been aiming for the 27530, which would be the top of the range. But that's crazy. But for the guys that were James Wong, and for these guys that are saying about the 5K, that is the boot camp. The boot camp, you have 3 stages. You got to pass all of the stages, and once you've passed all the stages, you will get your 20K funded account. 5K is the first stage. And Jonathan's disappeared. Victor, can I ask a question?
Go ahead.
How do you get over sometimes when you see when you're looking at the chart and you're getting a little bit of that creeping in that you want to close it when you know you haven't had a good reason to close it? How do you get over that?
But in that case, what time of the day would it be? Does it matter to you?
Nope, doesn't matter to me. Doesn't matter what time of the
And
day.
um,
Maybe actually a little bit with his CPI was coming out, so I did have that in the back of my mind. In all fairness, but yeah, it's probably actually because I knew that CPI was coming out. So, but
the thing is, there's always in your review you can check the you can at least explore the possible reason why you did that, and that could be like something you saw on the charts, but it can also be something psychologically, like what happened yesterday, what happened this morning, what is happening in your life in general, that makes you, fearful and
mhm.
uh, and not being able to let your trade run. And perhaps it is valid, right? Perhaps you did see something, a change of character in the market, in the price action, that you haven't at that moment, you weren't consciously identifying as such, but maybe there was something you did see. And if that is the case, in your review you can perhaps explore those scenario, those possibility, those
Yeah,
explanation. I think those are the things. And if you can't find anything, there's nothing really happening on your mindset, in terms of your mindset, anything that could have triggered your, make you more sensitive, more fearful, then
mm,
perhaps you could do improve it by gathering more data. Because when you have more data, you become more confident that,
yeah,
this has, when you can identify and quantify. For example, that's it in my case. If I can quantify the percentages that this will go my TP because I have good data on it, I feel quite comfortable. I would feel quite comfortable to let it run, because I have
yeah.
something to grab on mentally. While if you don't have anything, I feel like it's a 50-50. And if it's a 50-50, it feels uncomfortable, especially if the risk is too high. That's another thing. Maybe the lot size was too
It
high.
was the lot size. I think I wasn't. I'm not saying I'm not used to that kind of lot size, but I'm not used to that kind of lot size. I don't mind putting 10 lots on a trade. Don't mind putting 20 lots on a trade, but something was maybe a little bit. I was stuck in my initial balance for 2 weeks, and now we're finally getting a little bit of movement, a little bit of profit, and you're like, oh, I want to keep the profit instead of just letting it run, because I know for a fact leaving my trades run is much better than managing them. But it does
Absolutely.
creep in.
I've learned that the hard way. I really do. Like it's letting the trades run. That's the way to do it. All right, guys, we got CPI coming out in
80
a
seconds.
little over 1 minute. And so as you can see right here to the upper left, we have Euro USD. We got S&P 500 to the right. We got gold in the lower left corner, and we got Bitcoin in the lower right corner. Right now, what we're seeing is well, that's what we're seeing. Looking at the 1 minute, it's going to be interesting to see on 1 minute. So what I want to see here is Euro USD to absolutely go crazy to the downside.
Really?
I'm going long, just one lot. I'm just going just for the fun and the crack. I'm putting one lot with $150 risk.
All right, I got about,
because I want to see what happens with this.
Yeah, I got about 100 risk on this one as well. So it's a very small trade, but so going back to the analysis I did was from a technical perspective, it makes sense for the S&P 500 to move lower here and start a new downtrend. That would obviously mean that Bitcoin would start a new downtrend as well. Will break down. So we got the numbers.
Go on the 1 minute, bro. Go on the 1 minute for everything.
5 seconds to news.
Go on the 1 minute for everything.
Yeah, so we're on the 1 minute right now, and
news is out.
Yep.
But I got trashed.
Look at that.
Wow.
EU. Did I tell you guys?
I got trashed and I got
my
slipped.
Telegram group. It's one
I
Bitcoin
got slipped eight pips.
Let's go.
Bitcoin, no,
Straight to TP.
Bitcoin.
Bitcoin is dead. So what is the actual numbers though?
I'm glad I didn't bet anything on that. But that
see,
really
guys,
sucked.
3.5. It's actually higher than forecasted. Higher than forecasted. So inflation is higher.
Wow.
This means that it's the third time in a row that inflation numbers are coming in higher than expected. This is very strong for
That
USD.
means we're not cutting any rates anytime soon.
Yeah, this, ladies and gentlemen, what we're seeing right now is a risk-off move. And basically what a risk-off move means is USD is gaining strength here because riskier assets like obviously S&P 500, which tracks the stock market, which is obviously a risky asset, Bitcoin and gold, risky assets, and of course we got EU trading against the dollar. So in this case right here, the dollar will be viewed as a safe haven asset, right? Because now we will be looking at the Fed of maybe not raising or lowering rates as much as that they said, because as I said, this is the third time in a row that inflation numbers are coming in high, and this time it's actually higher than expected on all numbers, month to month and year to year. So yeah, it's we're seeing huge drops here on the 1 minute. Now, of course, this is normal, but when a move like this on the 1 minute is sustainable to the downside, we can switch to the 5 minute. I mean, look at that 5 minute candle right here. We can go to the 4 hour. Yeah, this is an obvious. Well, look at that. Look at that. Look at my trade. Where's my trade at? Holy shit! All right, Alex, you want to do a bet?
I think I put my money where my mouth is. I thought it was going up, and I lost $228 on it. So that's what you get.
That's what you get. I like that sound. It's like it's MP4.
And price went. I actually got slipped on that because price.
Why is there like a clown sound with MT5 when there's like loses connection? You log in and like, hello clown, you degenerate, welcome back. It's like welcome back to the trade station. It's time to okay. So obviously this is a huge risk off move, and we can look at gold. What's happening in gold? It's breaking down. So far it's following the analysis that I did earlier quite nicely. So we have that level right here. We do have a clear change of structure right now. The 4 hour candle is going to close in 26 minutes, which basically means we have a huge, is not an outside bar, but a huge bearish engulfing. And it doesn't really matter what this is. Whatever language you're speaking, this is death and destruction right here.
You can see though, at the end of that, you can see the push up on gold. Each leg it's going, it's actually getting a shorter before you see the retracements. And now if you look at the end, you've got two candles that are trying to push price up, and it's not actually moving very far. Whereas the one before you had 4, and then you had more. So you can see that it's losing.
This is my guy right here. We did tell them to sell.
Momentum.
You gotta join the Discord, and you have to post your setups in there. I want to see them. Get into the Discord. I want to see you guys post your setups in here. If you guys are not, if you're watching now and you're not in the Discord, you gotta join the Discord, because it's in the Discord where everything's happening. That's where we have our community of traders helping each other. If you want access to the Discord, you will have to have an active account, either a challenge account, evaluation account, or a funded account. You go into the dashboard, into the program experience side, and in the upper right corner you have a link to a Discord icon. You are in the Discord. Well, that's speeches for nothing, but that's for everyone else though. Okay, so just to recap what we talked about here, we got gold is breaking structure. It would be confirmed in 25 minutes. I confirm it on the 4 hour because the trend is basically the change of structure and everything is very visible on the 4 hour. On the daily, of course, this daily bearish engulfing candle would be good as well, but I think this daily candle, if everything, if we do have that retest, of course we have huge volatility right now, so we might not even get that retest. But look at that perfect level, a move like
crypto
this
looks bad.
happening.
Nah, just like altcoins,
Okay, so let's take a look at my altcoin holdings. I got quite a few altcoin holdings. Oh shit.
Yeah, man. It doesn't look too good.
It's not looking very good. Well, I got a lot of room to the downside though. This is swing trade. Sand is still in profit. Let's go through this. Not too bad. I don't think this is too bad though. The only ones in danger is Filecoin. Let's look at Bitcoin.
But then again,
yeah, this
can
Bitcoin
be
is not too bad.
Then again, this can be an opportunity to buy more. I mean, if you're still on the higher time frame bullish, this can be your moment. Not right now, but I mean, once the market settles and starts to perhaps the reversal.
Yeah. We have another trade idea setting up here on EuroCAD. I talked about this yesterday as well. I talked about how we have a hit of a high time frame level here. We got a weekly level, and basically what we want to see is a breakout structure to confirm this trade, and that would happen on the close to the 4-hour candle. And the breakout structure here should be very easy to identify. We have one uptrend right here. We got higher highs, higher lows, and then forms a support level here, breaks that support level downside. It's exactly the same pattern as we are seeing on gold. I can even bring this up next to each other and you'll see
that it's Euro Canadian.
Yeah, exactly.
That looks like a good trade.
What?
Looks like a good trade. It basically the same trade that we did long today on pound dollar. That is basically the inverse trade right now.
Yeah, exactly. Hit a high time frame level, and then it's a low time frame breakup structure. So yeah, it will basically be this, right? We go short on that retest, stops up here, and then TP probably around this area below. So looking at the daily, dude, I'm getting so many alerts. It's crazy, all over the place. Many alerts. So yeah, this is what I'm watching down to that area. Atom USD. All right, so I got a hit on an entry on Atom. So I just got an entry on Atom on this push down. So it's nice. Giving me some nice entries. Okay, so major movements right here. Let's just revisit. S&P 500. See if we have anything. Yeah, so that's on the weekly, on the daily. Yeah, so we're hitting the lows here now. So I think what we are seeing here now is we're seeing a possible downtrend starting here on the S&P 500. To me, it's quite obvious.
I agree. I see a lot of downward. Bearish structures. There's two outside bars. There's going to be forming another one, 3 on the daily on S&P. I mean, if that is not telling you, if that is not a sell signal.
So I'm gonna close the EU trade here because I'm up. Sorry for interrupting you, but I'm up 2.4R, and it's basically free money with CPI. So I'm just gonna close it right here. Low risk trade made 1.5R with my regular risk, even though this was 2.4. So free money when you have a move like this, when it looks like this on 1 minute, and you have CPI, you sell. If you're in a position like this and you have that drop on CPI, and you're able to get out of the position, just take the money and run, because it's basically free money. And I've been given this free money in the course of, a couple of minutes. So now that we're out of EU, I'm still bearish on EU to the downside. So what we're going to do is we're going to look at EuroCAD, right? Which was this one where I might see a entry confirming in 20 minutes. So what I wanted to do is I want to wait for the 1 hour candle to close, okay? Because still this is a news-driven move, a news-driven candle, and what you might see is this being a overreaction to the news, which I don't think it is. I think this is the proper reaction. But you might see an overreaction, and sometimes it's just going to come up here and then it's going to, go back down. Anything is possible in a market like this. So to really confirm that this is the move we're looking for, waiting for the 1 hour candle to close means we have 30 minutes gone by after the news event, which gives us confirmation that this is the direction price wants to go. We can also go into the 15-minute and look at the reaction to the breakdown area. Basically, the breakdown area is this one right here. If we have the 15-minute doing something like this around the retest, hits that level, and then start moving lower, that could also be a confirmation to enter here if the 1 hour candle is closing down here. So best case scenario, break and retest on the 15-minute with a 1 hour candle closing below. All right, so we've talked about this now for 40 minutes, but I do think that it was worth spending some time on this for sure, with the moves we're getting. Now,
I don't think there's anything. I don't really see that there's anything to actually trade at the moment until the market actually calms down, because you're not going to get short here, and if you're going to get long, you've got to see something happen. Pound dollar's in a demand area. It's just had a massive push down. I wouldn't be surprised if you do see a little bit of a retracement, but you can't jump into that until you've seen at least 15 minutes price action on the 1 minute to see if there's any change in structure. So we're going to be sitting on our hands, I think, for the next little bit of time.
Oh, look at GU. Wow. Holy shit, I'm glad I closed this one. This candle is nice.
Yeah, see, now I look back, I'm like, wow, what? Well done, Alex, for closing early. Yeah, you didn't need
Good job, Alex.
Yeah.
For
Your
closing.
intuition is
Look at
still
that
there.
candle, though. This is insane. This is insane. A long time ago, I saw a 1 hour candle like this one. I mean,
How many of that? So probably about 100 pips. Yeah, 100 pips.
106 pips. That's insane.
That's a huge candle. That's a humongous.
Yeah.
That's a $10,000 trade with 10 lots.
Yeah, and today I
let it up.
Now I look very smart with my close a few minutes before CPI. But the thing is, you never know the future, and with high impact news, it's the gamble factor or the unknown factor, the X factor is quite large. That's why I don't you can have all these structures and setup and signals, but when it comes to high impact news, all of that can be irrelevant, because the market will just break and go completely different, something that it hasn't been signaling to you. So that's why it's something, if you haven't had these either losses or big wins with high impact news, you will see it. It changes everything. It changes the game completely for the PA completely. So it's better to be on the safe side when it comes. And if you're in a lot of profit, it's better to either take it full off or take a good portion off from the table, so you're not gambling all the profits you already have. And if you're getting in, most likely you better have a stop loss very far away from your entry, because these moves can slip a long way. So and I would only be able to hold a trade if it has been forming like bigger time frame structures, things like H4. Like after my entry, it forms another engulfing H4 or an outside bar that is protecting me, right? Because structurally, that's what I want, something to protect me from the wick that is almost inevitably on my way. So if I don't have that, and it has to be something like substantial, something like an H4 or even a daily candlestick combination protecting my position. If I don't have that, then your chances of getting hit by the wick are quite large, and it's usually it doesn't serve your equity curve well, because those times you win, of course, you feel like the best trader in the world, but more often than not, the volatility is not justified to risk. So that's why I took it off, and now I'm very glad I did. Right.
So I'm in a short on gold. This is my first trade on gold on this account. I haven't traded gold in like a year, but the idea is pretty much confirmed here. And you see on the one of the only assets out of the four that we looked at. So we looked at gold, S&P 500, EU, and Bitcoin. The only asset that got bought up was gold. And on the 1 minute, you see a very heavy buying pressure right here. And what happens? You have the 1 hour coming at the 1 minute coming into that resistance area right here with a nice wick. So you can see on the 1 hour you got that breakdown, and it was that level that I looked at to get in on an entry. So it kind of feels like gold got bought up, but if you look at the other pairs, EU is not getting bought up as quickly. The S&P 500, I believe, is still, yes, it's I mean, looking at the 1 minute right here, the S&P 500 still has strong momentum to the downside. The only pair that showed a lot of strength on this move to the downside was actually gold, but I think it's lagging behind. So I think gold is probably going to come down lower. So this is the trade I have on gold. It's based on that high time frame analysis I did earlier. So basically what I'm looking at now is for this structure to break and see a move down to that level right there. That is also somewhat of a daily level. So let's see what happens with this one. It's yeah. So basically what if I lose, if I get stopped out on this trade, the EU trade I close for a profit, I will still be up half an hour. So I'm basically taking the profits from the EU short and putting it into a gold short, which I think makes sense.
Have you noticed the H4 order block, bullish order block that that gold reacted to, at least in my perspective? Can you see the one to that little small body, that one? Yes, that order block. If you form the order block the way I do it, you will see that the wick of price came very close in it and reacted.
This? No, you use the bodies.
Exactly.
You know what? Maybe this is good opportunity for you to
body.
take a few minutes to just go through a simple aspect of your trading strategy. Maybe talk about order blocks. You know, how do you identify order blocks, and you know, what is an order block, and how do you identify and find these order blocks on the chart?
Sure. I've been waiting for this all day. This is when I get very excited when I start talking about order blocks, right? I breathe, live, and see order blocks everywhere. No, but let me start sharing my screen. That's my screen, and this is very typical from if you look at the market a lot. This is what I've been seeing. I've been trading for some years now, and I've tried different strategies. And well, it could be something, you know, personal that I happen to like this way of trading, or I happen to see that this or this strategy clicks with my way of looking at the market. Of course, there's that component, but I've seen this. I've seen this all the time. And what I mean by this is how the market reacts to order blocks. And you can have your own opinion why the market is reacting there. Maybe it's not the order block, maybe it's something else. It's some resistance level. It can be some trend line, some EMA, and you may even be right, because I don't mean to say this is the only way of trading. But what I see a lot is this, and I will talk I will go into a little bit more detail what order blocks are to me, and I'll say why I say to me also. This is an order block to me, and I will tell you how I mark them and how I trade them. Typically, I see this. Well, not typically. I see this all the time, where price, at least the first time price comes to an order block, it has at least a reaction, right? when it price comes in, and sometimes it penetrates it, it goes even deeper. Sometimes it even squeezes it on the other side. As long as it doesn't close below it, it hasn't invalidated in my way of thinking. But the first time it comes to an order block, you will most likely have, very often, more often than not, you will see a reaction to it. And I'm not surprised at all that this happened here. I see that all the time. If I take this out, for example, you see this, that's another order block. Price comes back into it, moves out of it, right? It happens, and it's not always that a reaction is as big as this. Sometimes the reaction is, if let's say if you are in a downtrend, the reaction could be much less, right? In a downtrend, but it has a very good chance of having a reaction. Okay, so let's say, what is a order block? Well, to me, this is an order block. To me, well, let's start with how I draw them. An order block to me is a point where the market shows us, where the participants, each side, that one side takes over. That's to me, that's the essence of an order block, where either the buyers or the sellers are coming in a greater number or volume than the previous bar, and take control of the situation of price. And if we can just think about this, for example, this candle. Let me zoom this a little bit deeper, a little bit more in. If we see this bar, right, this is, or perhaps I should check this one. This one has a bigger body. It's a little bit more dramatic. When this bar opened, right, this is, well, for those who are new to trading, this is called a candlestick, right? A candlestick has a body and has, not always, but has also wicks on each side. The wicks is where price has traveled to the max and to the lowest of that period, that time period, right? For example, this one is a 4-hour order candle, so it means that this is what price has done during those 4 hours, during a 4-hour period. And where the as a on a bearish bar, one that starts at the beginning, the open is, of course, this one doesn't have a wick. I'll choose another one. This, for example, if I open this up a little bit more, you will see this is the open. This is the open. Let me point that out. That's not very clear, but that is the open. And on top of that, you see a little wick. That is in between the open and the close. Price has traveled to this point. This is the highest price has gotten in that specific 4-hour period. And wherever the body closes, this is called the body, right? That low of that body, that is where the close of price during that 4-hour period. And of course, the same way I explained about the wick, the lower wick is where price has traveled to the lowest point and come back to the close during that 4-hour period. To me, a order block is, and the reason why it works, this is my idea. It's not very original, but many people share this idea. But this is how I see it, and I agree with it. Within this time frame, and this can be 1 minute, this can be 1 hour, can be 1 week, it doesn't matter. In a set amount of time, sellers came in and pushed price. They were in control because the market wants, if there are more sellers, if the interest in selling is higher than buying, automatically the price will be priced lower. And this is what happens if you, without going into details about depth of markets and how that works, the fact that the price is going down, it means that the sellers are coming in, right? So in this bar, in this 4-hour period, the sellers were in control. And now in the on the following bar, we can see that the body, right? Remember, that's this solid part where it has solid color. The body is bigger, right? And to me, that's the visual representation of more more buying interest, and it because it closed higher than this, the length of this body, it means that the buying interest rest compared to this previous bar is bigger, right? And so in essence, what we are seeing when you have this is called engulfing, because the candle in this the second candle engulfs the first one. And now an engulfing is basically, simply said, is comparing to between those two bars where one side to control. In this case, it's a bullish one, but of course it can be a bearish one. And if you think about it, this is the area that the sellers were when this was going down, right? When it was going down, this is the area where they were feeling, they were right. Perhaps they were getting the getting signals on their system that you should be selling, right? Because during this 4 hour, the market really was going down on a net result. It was really going down. It was, and after this, the decision point happened after this, after the buyers took over control of price and pushed price much higher than the previous close. All these sellers are now, if they haven't closed their position yet, they are now in pain, right? Because price has shown them that they are on the wrong side of the market. And that decision point is what I like, that resonates with me. I like about order blocks. To me, that is the essence. When you have one side think and push price on one direction, but then in the next bar be confirmed to be wrong. And that is what makes an order block, in my opinion, powerful, because you will have all those traders who sold during this bar. They are in pain. They are trapped in a way, because they want to get out of their trade. So when price comes back to that area, they have a second chance to get out without a loss, of perhaps with a lesser loss. And it is a basic human emotion that when we feel pain, we want to get rid of that pain as quickly as possible, because nobody likes pain, right? So, and I think there is that component of human psychology, and that is what price action is, right? It's people, participants, wanting something, either it be fear or greed, or they are, their actions is the interpretation or the embodiment of how they feel about the market, right? So if in this case, when price comes back, all those who sold here get a chance to get out at maybe a smaller loss, and everyone who bought this, right, or who didn't get a chance to buy in this candle, get a second chance, because they now see that the market, the bulls are in control. That's why it closed much higher. They also the buyers get a second chance to get a good price, because this would be after it closes, they see, wow, what a great move, but I want to get in, not at this level, but perhaps at a discount level, right? Who doesn't like a discount? So, and those two forces, I don't know if it's exactly like this, but that is how I see the order block. Those two forces, they come together and push price. Once the order block is formed, Like in this case, it goes down, and forms the order block, and then comes back within that order block and then moves away. This is the basic, most simple explanation, I, in my opinion, of the order block. Right? It's the psychology behind it. Of course, I use the graph, but it is based on something that makes sense to me. Right? Well, now the second question is, how do I draw the order block? There are many variation how to do that, and I don't mean to say that mine is any more correct than any other. It's a matter of mm, trial and error. I suppose you should check different kinds, how they mark their order blocks. Different. I will take this out, and I'll choose another. There are uh, another place in the graph to show this. There are some traders who take the whole bar as the order block, right? And that's valid. Nothing wrong with that. And there are others who only take including the body and the one side of the wick, the side that is trapped. I chose to take this to draw them this way. Why did I do that? Because it makes the area a little bit smaller. And if it's a little bit smaller, then to me it's more, I am being more selective. And I would like to think, and actually I know this because I measure it the way I trade, that if the area where your the area of interest is smaller, your win rate you will get lesser trades, but your win rate will benefit from it, because you will be taking you have less chance of taking trades that are simply because of the size of the area is smaller. You will be taking less trades, and you will be closer to the action. Right? There is um, in general, if you're being more selective, you will get higher win rate. Right? Your percentage will go up. Okay, so that is how I measure them. There is one other thing. This is the engulfing, right? That's the engulfing candle. This is a bullish engulfing. And I think this is powerful because that's what I trade a lot. You can actually see in this example as well, right? I had another example here of this order block, and I didn't chose I didn't pick this. I was just talking about the H4 on gold, and I see this all the time, how the order block is formed, right? And price comes back after it formed the order block, comes back to that newly formed order block, and I call it fresh, because I think it matters how long it takes before coming back into this area, at least for my strategy. So I see this all the time. Price forms an order block, comes back, and moves out, and that's basically how I trade. If you look at this, you can see that the same thing happening. Price was going down, it forms that order block, and in this next candle, it comes back, revisits that order block before it continues, right? And when this is the time, let me adjust that with a marker. That is the time that I want to be in the trade. That is when it comes back, not when it closes as an engulfing, but when it comes back and retests this newly formed order block. And of course, I have many rules that I will not go into details right now. How and which one are better? How long do I wait? What kind of retracement is valid? And all those things that I learned from doing this very often and for a long time. But in general, that is the idea of the order block. I will tell you another thing. To me, order blocks, engulfing are basically what everyone, not everyone, but what is known to be to form order blocks, right? Engulfing, forming order blocks. I believe ICT talks about this in his many YouTube videos he has. Um, but I also I also consider, if you let go of that idea of an order block is an engulfing and only that, if you let go of that, I would consider, for example, this one also an engulfing. And in this case, I didn't mention this, but the order block, the lower part, the lower border of the order block, is the lowest of the two candles. So in the other one, this one, the bearish one was the lowest, right? But in this one, right here, it's the bullish one, right? The one going up, the green one, that has the lowest wick. I take the lowest of the two, right? In this case, that's this one. To me, this one is an order block as well. I know it is an engulfing, and you could ask me, why do I mention this? Because this is an engulfing as well. Yes, it is an engulfing, but it is also an outside bar, right? Outside bar meaning that the second bar, right, in the sequence takes out the low of the first bar and closes above the high of that previous bar, right? And this is more powerful, much more powerful than a regular engulfing, right? And it is the same thing at that is happening. I know this is also an engulfing, but I show you why I say this in a little while. These are, to me, these are also engulfing. I'm sorry, order blocks. And you can see that again, as I say it all the time, it forms it, right? It goes a little bit higher, comes back. Where does it touch? It touches that order block for that little bit, and it moves away like a rocket. See that? And it actually never comes back, right? It doesn't always do that. And I don't mean to say it is necessarily because of this outside bar, but I do see that market reacts more violently, better to outside bars. And now you may ask yourself, why do I trade this, right? Or better yet, why do I mention engulfing this one, the outside bar, again? And the reason is this. Let me see if I can find one in this chart. I don't see one very quickly. Perhaps if I have an outside bar, it doesn't matter. It doesn't have to be an engulfing necessarily. If I don't want to take very long to look for one, but if I, for example, let me see if I can catch one very quickly. Perhaps on the daily. I remember there was one some time ago that was very, this one, for example. Never mind the rest of what the chart says, but this, you have a bullish bar, right? These two bars, right? You have a bullish bar, and then you have another bullish bar, and according to the definition of outside bar, this is one, right? Because it takes out the low of this one, right? And then comes back and closes above the high of the bar number one. So that's an outside bar. And if you're only looking for an engulfing, you would have missed this, right? But to me, this is as valid, and sometimes even more valid, as an order block, right? So that is something that I don't know if other people are doing it, because I don't look at other people how they do it, because I've found my way of doing it, and I'm happy. I'm content with the way I do it, and that's I like how I do it. So, um, um, so I don't know if other people consider that an order block as well, but I do, and that's how I trade. So that is one thing, one concept that I use in my trading. One very basic concept, the order block. And the other thing that I use a lot is this. Let me show you on a bigger time frame. Perhaps I can show you on the daily. Let's see. Sure. Yeah, sure. I can show you here. Let me get another structure that could be perhaps better. I'll do it on GU, because I remember we have a signal, a daily signal on GU as well. Okay. The other structure I use is the Quasimodo, right? Quasimodo is short for our quasi. I mean, it's short for Quasimodo, and I use quasis a lot, all the time, and I try to merge those two concepts, right? So the order block and quasis. Quasis is basically
Can I just, let me just, I want to, sorry for interrupting, but I want to like mention something here when it comes to so basically what you're doing here, you're combining order blocks and the Quasimodo pattern. And I think for a lot of people watching this, I think it's very, very important that you take note of what he's saying right here, because he takes two things that he likes and then he combines it, and that's how you build a system. So you have something. So for me, for example, I like the break and retest, and I like certain areas with the fibs, and I see that if I combine those two, I increase the win rate of the break and retest, right? And I think this is something that Victor will talk about a little bit as well. Before we move on, Victor, let me just, because I've seen a lot of people in the chat talking about the gold short, and I want to update you guys all on the gold short we have open. So this is the short I talked about on gold. I have 2 positions open right now. So double risk. I'm not supposed to be taking double risk. So the first position is about to hit TP here. That's going to be 1R, and it just hit TP right now. So that one is a 1R winner. This one right here. When we break down here, I'll move stops to entry on this one, and whatever happens, I'll be up 1R. Quick update on the Euro CAD trade as well. Remember how we talked about this, and if the 4-hour candle is closing below the structure, we have a break of structure. Going into the 15-minute or even the 5-minute, we have a break and retest of that area. So I'm in this trade as well. It's activated, and now it's just about waiting and hopefully see the market continuing lower, right? So just a quick update on those positions. Go ahead, Victor.
Thank you for that update, Jonathan. Yes, yeah, that is my screen. I was at the what Jonathan said is very important, because in the end, your system has to be yours. And what I mean by that is, it doesn't matter what other people are using or what is functioning for them, what is working for them. If it is not yours, to me, you have to make it yours, and to make it yours, you need to know it inside out, and build it. So have all the components that you believe in and that you have confidence in using, and that is what I did. I used the order block as the basis of my trading. And the other thing this is the thought process that I had. Okay, so I would ask myself, okay, I know by having an order block, let's say, let me get in, I was GU, I think it was, yep. When I have an order block, I have an expectation, right, of that price could be coming back. Perhaps I should put this in explain this a little better. When I have an order block, right, I have the expectation that, let me mark, let's say this is a bearish bar, right? And this is the engulfing. This is the bullish bar that had engulfed, right? Perhaps I can change color and make it a little bit more illustrated better. Let me check. This would be background. This will be the bullish bar. Make it something like this, right? That looks better. And this one would be the bearish bar. Right? And you do have, of course, those wicks, but for sake of I think this is good enough. Okay, so we have an engulfing, right? And the general idea is that this is then my order block, right? I will change the color, of course, to, let's say, this. Oh, I'm in the daily time frame, so I need to choose the daily. Okay, so imagine you have this order block, you farm it, and imagine the wicks are about here, and this is the order block, right? You have an engulfing, and now this is the thought process I had when I was building my system. I thought, okay, so now I see a phenomenon in the market, right, that I can not predict, because nobody can really predict the market. We can expect, we can project, but we really don't know what the market will do. But this phenomenon happens very often. So I say, okay, now I can identify where I'm going to enter, and I have a direction, right? So because I think having this order block gives me, I want to be buying in this area, the area that is formed by the order block. And I also, my expectation is then for the move out, right? And the next part of my system was, okay, how do I increase my results? How do I enhance my result in this trade, right? So I start with the basic, with the order block. And my answer to that is, well, I need a reversal pattern, because what is price doing? Price is reversing somewhere in here for this move up. So I went and looked, and I look at different reversal pattern, and I say there are many. But I'm only going to choose one, and the one that I liked the most was the Quasimodo. And basically, what the Quasimodo is, quasi is this. If you look at it, normally you have the head and shoulders, right? You have an uptrend, and at some point the uptrend has this, like something similar. It doesn't have to be as symmetrical in the market, but this is the textbook depiction of a head and shoulder, right? You have the head, right, which is the peak, this one, and then you have the left side, the left peak, which is called the left shoulder, and you have the right shoulder. That is basically the very common, very taught, that everybody sees in this is the textbook example. And you do have this, and it's great, but you also have the Quasimodo, which is a head and shoulder, but is not symmetrical, where you can have something like this, and this could be even much lower, or it can be even much higher, depending on the situation. And that's the reference to Quasimodo, yeah, that being a because it's not very symmetrical. And that's
a very nice way to put it.
Well, yes, I didn't want to keep it
very
nice.
Symmetrical.
Yeah, I mean, I didn't want to hurt the feelings of Quasimodo, you know.
Yeah, of course. All respect to that, dude. Thanks of him that we have this pattern, obviously.
So this is the pattern. It's a head and shoulders still. You still are expecting the market to do a high and then form another lower high before it continues lower. And typically in the head and shoulder pattern, right, you have the textbook that I remember is the entry would be here. The entry would be here, and the stops could be either this high or this high, and they project the distance, right, from the neckline to the top, right, and that distance, let's say in this case it's 672 in whatever pip that is. I think we're on GU. Okay, so 672. So they project either something like this, right? 72, something like that. This is basically the head and shoulder, the textbook example of how you should trade them, right? You enter either at the break of the neckline, and you put your stop above this, either this peak or the other one, and you target either 1-to-1 or whatever the textbook was telling you in that case. But what I saw and what I use is I don't like to enter that way, because if you think about it, what I saw was that it doesn't work, the percentage of times it actually does it like that is not very high. I don't know why, and doesn't really matter why it doesn't work like that. At least it didn't work for me. So what I do is I just target the low, the last low before after this head, right? That's for targeting, but it doesn't matter. The point being is that I chose a reversal pattern that I saw, that I understood, and that I actually saw in the market measure that it works well, right? It can, a lot of times the market will form a reversal pattern, not always in the form of a quasi, but very often it will in the form of a quasi. And I thought if I can combine that reversal pattern with the order block that I just explained, then I have a winning combination. I know the area where I want to enter, and I know the direction I want to go, and I know when the market wants to reverse, at least within a certain degree of certainty. And that's basically what I trade. So I trade order blocks and quasis. There's more to it, of course, but those are the two concepts that I use a lot. Those are the basis of my strategy, and I use other things as well, like top-down analysis, and I use ranges, daily ranges, and so on, to increase my win rate, to pinpoint. I have a very structured way of how do I know, even within the quasi, where do I enter, right? Because because where do you enter in? Let's say you have this Quasimodo pattern, right? In my when I mark them, I need a neckline, because that's the activation. As long as it doesn't break that neckline, to me, there's no Quasimodo, right? But once it breaks that and it comes back, I have a specific area, and this maybe I will cover in at another time, a specific area of where do I want to enter. It's not that, it breaks, I'm gonna go in right away. I'm gonna be patient and wait for price to come back and find the optimal price, and very selective in doing so. And it may have me miss a lot of trades, but that's what my data tells me that works best so far. And of course, in the future, I don't know, maybe I will shift my strategy a little bit if my data suggests me I should. But this is I've been trading this way quite some time now, and I know this by heart. I have my trade plan written down, but I really do this so often that I do it in my dreams. So that's basically my an extensive introduction to how I trade. Any questions?
Yeah, man, that was awesome. I love the idea of combining order blocks and the Quasimodo pattern. There's actually a video on our YouTube channel from Gil, the founder. I believe he made a tutorial on the Quasimodo pattern. Very, very good. Definitely check out that one. Yeah. So, do we have any questions? Yeah, I have one question. You guys want to take a break?
I don't mind. I definitely don't mind taking a break. We can have a 10-minute break and get a bit of water and just liven up a little bit. How is the gold trade?
Oh yeah, let's do a quick update on the gold trade. We got on the 5-minute here, so it's breaking down quite nicely. Again, the first trade, the first position hit TP, so 1 hour up on that one. The trade I'm liking the best though is EuroCAD. This one is for some reason I'm up much more than I should be on this one. So I probably made a good mistake here by opening a bigger position than I should have done. So I'm
how God.
so I'm actually going to close. I'm not going to do anything. No, I am going to close.
Nice.
I'm actually going to close one. Let's see. I'm going to close one part, half of this position. Just to see I do everything correctly here. Yes. Okay. Close one. Right. Okay.
This is a great question, and we'll talk about this afterwards. But yeah, this is a great question.
Do we have a live outside trading?
No, not yet. Not yet. Don't spoil it.
Yeah, let's take a break. I do have planned like
if we have lives. You're gonna have to.
And Victor, like that was a great presentation. We're definitely going to go more into detail on your trading system. We do have a lot of questions, but I think we should save them for another time. Actually, like next week on Monday, I want to do another session with you, breaking this down in more detail. So people who are watching live and watching the replay, you have an introduction to the way Victor trades here, and then we can kind of go into more details, and maybe have some trade examples to go through maybe on Monday. All right, let's take
you're going through the psychological stuff, yeah?
Yeah,
you're going to talk about psychology. Okay.
See you in 10 minutes.
All right.
All right. What's up, guys? What's up? What's up? What's up? Welcome back. Let me see what's happening with gold. Yep. Gold looking good. Cat looking well.
Also looking good.
Well, I think
These are good.
I mean,
these are gonna be good for the leaving. Trust me. Just
yeah, definitely. I'm already like only today I'm up 4 hours. So like even with these being losers, I'll be up.
I would maybe the euro, but the gold one definitely. The gold looked like it needed to come down. I wouldn't be surprised if it continues for a little bit more. Euro CAD is like for me is like but maybe, but definitely that gold trade is delicious. So I'd keep that.
But I'll keep them both. Like what my initial idea for gold was to take it all the way down here.
This is not what I want to be hearing. This is a sad moment for you, John. But you're gonna come back. You're gonna come back stronger, mate. Don't worry about it.
And I need to get myself a phone like that. I need those effects. That's so.
You have to see that,
okay, so do we hold the gold trade all the way down here?
Actually, that order black would probably be the first place to get out of.
This one, right?
Yeah.
Yeah, that's where I have TP. So, I mean, it's still at 2.5.
Maybe
anyway,
I wouldn't be surprised if it front runs a little bit as well. So maybe just a little bit. Anyway, you do your trade. I'm just I want you to bag those profits.
I mean, discussions like this is good. Okay, so let me.
While you do that, I'm going to be in the background, and I will get the giveaway and stuff soon because I've got some support stuff. I'll be working in the background right now, but I'll come on when you finish with this. All right, mate.
All right, perfect. Okay, so let me know, guys, if you have any questions. So
before you continue, Jonathan, that trade you're in was your cat, right?
Yeah.
We have high impact news, cat news in 4 minutes.
Oh shit! God,
yes, we have interest rate.
Alex is laughing in the background.
Okay, I'm coming back. What's going on? I'm not missing this.
Okay, hi. Oh, that's interest rate decision for the Bank of Canada.
Yes.
Oh,
leave the
yeah.
trade on.
Yeah, I'm closing that one. Thank you very much.
No,
wait. No, that's done. I'm done.
You closed
I'm done
the
with
whole
that.
thing.
Yeah, I'm not holding this to interest rate decision.
It goes straight to your TP. Think of it. If the US did that.
God damn it! I'm feeling like you know when you like your hand starts to like tingling because you're like filled up adrenaline and you don't know what the hell you're doing and you're like
that is a well done for closing it. If that's the way that you felt, well done for closing it. But honestly, I do think it's going to smash down. Don't forget, it's also pumping just before news. What normally happens just before news is that pump, I want to see this though. This is gonna be.
Yeah. Okay. So before we start,
let's go on to 1 minute.
It's in about 3 or 4 minutes. Yeah.
Wow.
That was a close call.
Wow.
Thank you, Victor. You might have saved me there. Today is your day. It is very much my day. Very much my day today.
And then it goes straight to take profit. Watch.
Oh, fuck. No, I'm not supposed to be swearing. Sorry about that.
How long have we got? And then I'll go in the background. Yeah, you know what? I can't miss the juice. Can't miss the action, And also, I was listening to Victor, but I felt a bit like a lemon, I was just like sat here. I was like, I was. I'm not going to do that through Jonathan's as much as I like. I'm listening. I think we need all the focus to be on the person. So I'm gonna
Yeah,
go out
honestly,
in the
like
background.
when Victor was we're going through his presentation, like I wanted to be very involved and ask questions, but honestly, like I was in that
It was
gold trade and I had too big of a position on EuroCAD, and I'm like just watching the 1 minute chart.
gosh,
Oh,
we've all been there. I was Quasimodo is
pump
something.
it.
The
Okay,
first
news
time I
should
learned
be
about, I learned about the Quasimodo from Gil actually when I first got into trading forex. And
Yeah, I'm gonna
if
shake
you
my
guys
heart
want
rate.
to
I need
go,
to
God, you are. Yo, bro.
look at my. I'm gonna shake
I
my
wish you
heart
would
rate.
have left. I wish you would have just left the trade on, and then it would have been,
Uh,
just waiting to see what happened. But
let's see
if
what
you guys want to go into
BPM
the
is on.
YouTube, and go to the playlist and see some of Gil's old workshops, or go into your hub and you can go into the VOD. You'll see all of his Quasimodo stuff. A little bit different from the Victor's got some nuances that are definitely worth taking his advice. But there is an old way of doing the Quasimodo, and I think Gil comes up with his way of looking, which is super interesting as well. The new school and old.
If I'm not mistaken, the way Gale does it is the traditional way. That's the way I think most people know Quasimodo.
Yeah, you've got
Yeah,
nuances
coming out.
which get the.
All right, stop talking.
I like the nuances. Wait, I wanna see, when is it coming out? When's the news gonna come out?
Now,
Oh yeah.
In
Straight
35
upwards.
seconds.
Oh mate, it's gonna dump. It is going to dump. I bet you it's gonna dump all the way back to your take profit.
Don't do this to me. Oh, 1 minute. I thought it was.
100%.
Oh, but I thought it was now. Okay, I'm like way ahead.
Dun 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 dun.
10 seconds.
10 seconds.
Here we go.
Yeah. That was very anticlimactic. That was.
God damn it!
I knew
No!
it! Knew it!
Oh, it's reversing.
Wait, hold on.
Look at that. It's
Oh my
reversing.
God.
It's coming
What
back
is
up.
it doing?
Oh,
How many
Oh my
trades
God,
was there?
it's going to
How many
stay
R was there, Jonathan?
Oh.
well, 2.35. I mean, I still got one hour, 1.5 hour of this one. It is what it is. It is what it
Mate.
is. What about gold? What about gold?
I did
Let's
say.
come down more,
I did
please.
say. Oh.
Oh,
Look, you win some, you lose some.
yeah. I mean, I definitely won today, so that's all right.
No, it's
It's God. Why did I close this one? Like, this was a high time frame trade. Why did I close the trade?
Look, I don't know what's going on. I don't know. You just look like.
Why did
the
I close
market-
this trade? Look at this. This
It
is
just
like
looks-
perfect.
It
This
just looks
is
like the
exactly what
market
I
has
told
beat
you.
you up. You just like the market's come. It's just beat you up. You just don't know what to do. it's so funny. Anyway, talking about psychology and stuff, I think.
I think it hit your TP now, right? On EuroCAD. Did it hit your TP?
Well, I'm ready
I
to
think
end
it
the
hit your
live stream
TP
right
now.
here if that's okay with you guys. No, okay.
Can I just go back on it? I just want to have a look before we go again. Oh my gosh.
Oh,
Yeah.
Oh.
that
Well,
was
literally,
a sure
like, this-
thing,
this-
Jonathan. A sure thing.
This was the plan. Yeah, this is definitely manipulation. This is the coming to get me. This
You
is
just
probably
reminded
the-
me
This
that I
is
need to
probably the
trim my
best
nose
comment
hair.
of the day.
That is super random for a trading stream. But there you go. I'm glad I helped you remind yourself to trim your nose hairs.
All right,
Interesting.
so now let's talk about trading psychology. Okay.
Okay, guys, I'm out. See you in a
Okay,
bit.
guys. Take nut, guys.
I'll be-
Take care of you.
Wow, I like that effect.
Nice.
Yeah, and I was supposed to
nice.
disappear when I was.
All right, there it goes. All right, so trading psychology. Let's now. Obviously, we might not have, you know, we don't have a lot of time to do this, but it's going to take quite some time. So this live stream here today might go on for perhaps a bit longer than usual. Alex is shaking his head in the background. But yeah, I'll go through it, and then going forward, in the future, we'll have more of a more in-depth. So you could view this as sort of an introduction. Okay, so why psychology matters in trading? So trading is much more than technical analysis. It's I always say TA is easy, trading is hard. And what I mean by that is it's quite easy to identify a trend. Okay, it's quite easy to identify an uptrend. It's higher highs and higher lows. If you're trend trading trader, you look for higher highs and higher lows. You go in the break and retest. It's like it's super simple. But what we've just showed you with the gold trade and especially the Euro CAD trade, I gotta close down MetaTrader because I'm still seeing that stupid 1 minute chart. And it's really affecting my psychology. So yeah, what we see is like, I got the idea. Okay, I got the idea. And we're definitely going to talk about life balance as well, like in the comments. So that's why trading is so difficult, because it's not all about TA. It's about executing your actual ideas. And as you see, like, I don't have to explain this. You saw it live on this live stream, why your decision can create problems for you. So when you first start trading, you go through the learning phase, and in the learning phase, the most important thing is technical analysis. But then you go into the trading phase. So first you'll learn how to trade, and you probably develop a technical system. At that point, you're not really focused on trading psychology. But then when you have a system and you go into live markets and you actually start trading, now you go into the trading phase, and technical analysis will not matter as much. Now what matters is trading psychology. And trading is all about execution. So when it comes to executing your trade ideas that you've created using technical analysis, this is now when we go into the realm of trading psychology. And the most successful traders, they have understood that profitable trading has more to do with your approach to the market from a mental point of view. And they have figured out that once you have that technical system in place, it's time to focus on your mental edge. So what is mental edge? Now, let me put it this way. You will arrive at consistent profitability when you successfully merge your trading system, technical edge, with your mental edge. And there needs to be a balance between these two. So this is why you want to have a trading system that fits your personality. It's very, very important that the way you're trading and the system that you're trading should fit your personality and your psychological profile. So if you're trading a style that you can't relate to, it's going to be very difficult to find the balance between that system's edge and your mental edge. And this is crucial for success in trading. As you can see right here, it says trading can be very stressful. And I would like to say trading is very stressful, because most of the mistakes that we make in the markets are mental-based errors fueled by emotions like fear and especially different types of stress. So this is why you have to pay attention to trading psychology. And you need to listen to your own emotions, and you need to get to know yourself on a deeper level. This is the single most important aspect of your trading career, and it's going to be an ever evolving process. And it will get easier with time. All right, it will get easier with time, but it's always going to be a challenge. It's always going to be somewhat of a struggle. We're all humans. We're driven by emotions, right? So you can never let that guard down. Always be on the lookout for mental errors. So we have 10%, 20%, and 70%. So if I were to ask you, let's divide trading up into 3 different parts where you have first you have trading psychology, and then you have technical analysis, and then you have risk management. Where would you put these 2 in the order of importance? I think most of you watching this is understanding what I'm trying to say here. So in terms of these 3 things, I would say that technical analysis is only about 10% of your trading, while risk management would make up about 20% of your trading. And trading, sorry, I got some hair in my mouth. Perfect little break there. All right, so trading psychology is about 7% of your trading success. So in the beginning, it's kind of like the other way around. When you develop a system, it's like TA is 70%, risk management 20, and trading psychology 10. But then when you start trading live, you flip that around. When you have a system in place, you flip it around because now psychology is the most important thing. All right. The flow state of mind. And we had someone mention Trading in the Zone. Trading in the Zone is a great book to navigate psychology, and I absolutely agree with that. And this whole presentation is actually inspired by Trading in the Zone. So Trading in the Zone by Mark Douglas, a fantastic book on trading psychology. I read that book almost, I think like 4 times a year. I read that book. I got it on an audiobook, and I read it when I'm out on a run, listen to it. It's really good book, and it's really what has made me the trader I am today. So in Trading in the Zone, he talks about the flow state of mind, and more importantly, the intuitive stage of trading, the last stage of trading. And to achieve that flow state of mind and to achieve that intuitive stage where you're not making mistakes like the one I did with EuroCAD, right? You see a trade set up, and you're like, yeah, I'm just going to effortlessly put in my orders, and I'm going to leave, and I have my plan, and I'm going to follow my plan and just be in the flow. Like there's nothing that can happen in the market from this point on that can affect me emotionally because I already have entered the trade, I got my plan, and I've accepted the risk fully. Now, to enter the intuitive stage of trading is never going to be possible to achieve without being able to tap into that flow state of mind regularly. And you're never going to be able to tap or achieve that flow state of mind on a consistent basis without really mastering trading psychology. And that's why psychology matters in trading. There's a lot of people out there who says like, yeah, psychology doesn't matter, you just follow your system. I don't know, maybe they're psychopaths, I don't know, but psychology matters in trading. If you say otherwise, I simply cannot agree with you. Because from my own experience, it absolutely matters 100%. Right, let's talk about some dangers of mental mistakes and how to fix them. So it's where's, all right, there it is. So it's not only about the negative emotions. Okay, it's very important to understand here that trading psychology is not about, you know, just focusing on or taking care of your negative emotions. Positive and happy feelings, like happy feelings can be a problem in trading as well. Like euphoria can lead to it doesn't have to be euphoria, just if you feel very happy, like today, for example, very good example. I took a lot of good trades. I'm up 4R on the day, and I started feeling very good about that, right? And not that I'm euphoric, but I'm definitely positive about it. And that can easily lead to overconfidence. And that overconfidence might make you miss important details of the trade. And in the same way, anger and frustration will lead to revenge trading, which is the flip side. And that will also have the effect of making you miss important details of the trade. And like it says right here, balance between these two is key. So it's all about finding that balance. You basically need a good balance between the negative and the positive emotions, because trading it's sort of like an emotional roller coaster, and you need to make sure that the emotional scale remains as even as possible not to have these exaggerated emotions destroy your trading results. It can go, very positive emotions or very negative emotions. Both will have the same effect on your trading, just in different ways. So make sure you stay balanced. And a great way of managing your emotions is to manage your expectations. So when it comes to trading, you need to be able to function from a probabilistic mindset. This basically means that every trade you take on an individual level has a completely random outcome. But when you have many trades, you can see consistent results. So from a completely random process, you can get consistently positive results. Now, like I mentioned before, if you haven't read the book Trading in the Zone by Mark Douglas yet, I highly recommend that you do. And you could view this presentation as sort of a introduction to trading psychology, while that book will dive deep into what it's all about. And if I would just recommend one book, it's that one. But honestly, there's another book called Atomic Habits by James Clear. Those two books come together and form the perfect equilibrium for traders, because by using the method in the book Atomic Habits to create routines and habits with the mindset that trading in the soul will set you up as a good trader. Now, I've read probably 20 books on trading psychology, and basically all of them say the same stuff as in Trading in the Zone, is in different ways. So Trading in the Zone, at least that's like my trading Bible, if you will. So I'm gonna present a list of principles based on the core principles in Trading in the Zone, and these principles are based or created to help you manage your emotions and expectations. So before we go into the rest, remember that the goal and the goal as a profitable trader is always to function from the right mindset. And that is a mindset of probabilistic thinking. So let's go first. Number one, I know that anything can happen. So these are if you go through this list before you take a trade, you should at least somewhat be setting up to enter that flow state of mind. All right, anything can happen. Now, this is the approach that you need to have before each trade. So every new individual trade has a completely random outcome, and you have no idea what that outcome will be. And also repeat, I don't need to know what will happen next. To be a consistently profitable trader, you don't need to know what will happen next. No one can predict the future. And if you think you know what will happen, you're simply wrong and you're functioning from the wrong type of mindset. Number three, every trade has a random distribution of wins and losses. So for every trade where your edge is visible, you have a completely random distribution of wins and losses. And the idea of having a probabilistic mindset is to understand that it's still possible to have consistent results by taking trades where the outcome is completely random. Now, think about how a casino makes money. How does a casino make money constantly? Now, the outcome of every individual game is basically random, but the house always wins because they have a small edge over the gambler, right? And you don't need to know who will win the next game. I mean, that's going to be impossible. Who's going to win the next game? You don't know, but you know who's going to win over the course of 100 games or 1,000 games. The house always wins in a casino. You want to be the casino. A trader that functions from the right mindset always wins in the market with a big enough sample size of trades. Number four, I objectively identify my edge. Every moment in the market is unique. Every new trade opportunity has a completely random outcome, as we've already talked about. Now, given these circumstances, you have to be completely objective when approaching your next trade. So your next trade has nothing to do with the outcome of your previous trades. So whenever you close a trade, You close that book and you start a new book, okay? And that new book would be the next trade, and they have nothing to do with each other because on a trade-to-trade basis, they're completely random, okay? Number 5, I completely accept the risk. Now, number 5 here is, it's probably the most difficult thing to do. So there's more than money at stake most of the time. You have to understand, what are you actually risking? Maybe you're afraid of being wrong. You're afraid of losing money. You're afraid of adding just another loser to your trade journal. You want to have that win rate. You're afraid of losing. There's a lot of fear and greed in trading. So these are some of the questions that you really have to ask yourself and figure out before you truly can accept the risk of the trade. Because some people say, like, yeah, I'm risking 1 hour, that's it. But what are you really risking? What emotions are you risking to feel if that trade becomes a loser? So ask yourself on a more personal and deep level, what are you actually risking? Because you need to fully and completely accept the risk of the trade, not to have emotions affect your decision making when being in the trade. So basically, yes, if you can't accept the risk of the trade, it's going to be very hard for you to manage that trade and follow the plan efficiently. And this leads me to point number 6. I follow the plan, whatever happens. It's always crucial that you follow the plan of the trade in every little detail. So you should always set up a detailed plan before entering the trade. And this plan is most likely going to be based on your trading system, right? And any changes to this system or to this plan needs to happen after exiting the trade, not while you're still in the trade. So any major changes has to happen after carefully analyzing, and that is usually done during the week or the monthly trade reviews and your regular backtesting sessions. So from the point of entering the trade and exiting the trade, you're not supposed to do anything else than what's written in your trading plan. So Eurocant, for example, that's a set and forget trade. Did I set and forget? No, I changed the plan in the middle of the trade. And what happened? I haven't watched the chart, but it's probably looking pretty good if I stayed in it, right? Actually, you know what? Yeah, that's insane. So exactly what I'm saying is, I changed the plan while being in the trade. That's not the right time to do so. Number 7, I constantly monitor myself for mental errors. For me, at least, personally, this is because I do have a good understanding of 1 to 6, but number 7 requires active participation. It requires you to be active and really think about what you're thinking. So you always need to be high alert for any errors that you might make. Now, these errors are most likely based on psychological issues. So you have to make sure that you are balanced. Again, you need to find that balance. You need to be very, very balanced mentally. You need to make sure that if you lose the balance, go away from the screens, go away from your office, do something that will help you regain that balance. So as soon as you feel like you have an emotional imbalance, you have to take a break and pretty much reset. So, okay, so it's been about 20 minutes or so. I'm going to go through this, pick up the pace here to make sure we're not here all day, because we've been live for over 2 hours now. So I'm pretty sure that you guys have. Who am I kidding? You don't have a life outside trading. None of us do. So, okay. So now, real examples of mental mistakes. Okay, so this is the plan. What we're watching right now, this is my plan, okay? So I want to show you some real examples, because I'm sure that a lot of you can relate to this. And afterwards, we'll talk about how we can prevent these types of mistakes. So here we see a chart with a very clear plan. The plan, this is the plan where we're going to follow, but following a trading plan is much easier said than done. So basically, the idea here is enter if there's a bearish engulfing inside the blue box. Okay, the blue box is resistance. If there's a bearish engulfing candle, we enter. Stop loss on that trade is going to be above the candle, and then we're gonna put a trading stop loss with every new swing low. Let me see. There's something with my mic. Just give me a second. Right, that should be better. Okay, so now let's go on to the next one. All right, so we now have a bearish engulfing candle within the blue box, and the plan is now activated, and we entered the trade right here in the close of that candle, according to a plan. So far so good. We you at this point you probably feel good about the plan. Starting to play out exactly as you want it to be, right? And now, price is moving lower, and your plan is working out almost, perfectly. At this point, you probably start to feel really good about yourself, and that feeling of happiness and perhaps even euphoria is the first sign of problem, right? Now you're in this trade and you feel really, really good, but you're going to monitor yourself at all times to make sure that the positive emotions doesn't get too big, right? And the feeling of happiness and perhaps even man, I kind of lost my train of thoughts. Sorry, guys. All right, so let's continue. Now, again, you're supposed to be stay balanced, right? So, again, when you get like overconfident or you feel that euphoria, you might start to make changes or lose important details here. Let's see. Now, imagine if you're still in this trade. So imagine that you leave your desk for a few hours and you come back to price almost hitting your stop loss. It goes all the way down here, and you don't close the trade here, but it goes all the way down here, and you feel very happy about the fact that you're all the way down here. And you take a break, you come back, and now trade is almost hitting your stop loss. And last time you checked, you were in great profit. So this move is unexpected, and you panic and you exit the trade immediately. Now, still, your plan is to let this trade run with a trailing stop loss on the 4-hour. So with a trailing stop loss on the 4-hour, you're supposed to put your stop loss above every new lower swing high. If you've gone from being euphoric to fearful in just a couple of hours, and that is the emotional roller coaster that is trading. And these exaggerated emotions that you felt when in profit caused the fearful response to be even stronger, and it kind of caused you to panic and exit for a loss. And then the plan plays out. So I'm sure that a lot of you can relate to this. And me, I definitely can, because you've just seen 20 minutes ago me doing something similar. You exit the position too early, only to see it hit that target later. Now, a situation like this is obviously very hard to manage emotionally. And somewhere within this trend, you might have had tried to jump the idea again with a suboptimal setup and get stopped out again. And that's basically revenge trading. So imagine that you closed it here, and then you try to get in and you get stopped out, and you try to ride this trend down. But in that case, you're probably using too tight stop losses. But this is a good example of, you closed it here. You had exaggerated positive emotions here because the plan tried to, basically play that perfectly. You closed the trade here, and then boom, straight went down here. What if you come back down and you see, you come back to the office, a day later, and you see this? That's going to cause even more exaggerated emotions. And if you act on that, you're probably going to start revenge trading to get back, to get a new trade like this one. All right, last part of this. What you need is a plan, a mental plan. So here, what I've done personally is when reading the Trading in the Zone and James Clear's Atomic Habit, I'm creating rules and habits around my trading psychology. So to be able to function from that probabilistic mindset, right? You need to be mentally balanced, focused, and of course calm. So now I want to go through some of the stuff that I do to make sure that I stay balanced, to be able to more easily tap into that flow state of mind while still keeping that probabilistic mindset. And a very important thing for me, at least, is my daily routines and my daily habits. So I've tried to set up my environment and lifestyle around me in a way that creates as little friction as possible between my normal state of mind and the flow state of mind. And when it comes to creating new habits, like I said, I've used the book Atomic Habits, which I highly recommend that you check out. So what I do is now stress is personally one of my biggest enemies. So for me, one of the most obvious problems I have in trading is trading while stressed. And for me, meditation really does help with this. I try to meditate at least 10 minutes every day. And this is the first thing I do when I enter my office in the morning. And a tip for those who think like meditation is not for you and it's very difficult to, sit quietly just for 10 minutes. Well, try 30 seconds. Okay. So every time you enter the office or you start your trading session, you start with 30 seconds. Okay. Put a timer on 30 seconds and then do that for a week, and then a minute, and then 2 minutes, and then 5 minutes. And then you'll feel like 10 minutes is nothing, because it's all about building those small habits and creating a routine. And it's very, very good for my trading. And again, like working out, another very great way of managing stress is working out regularly. And I don't think I have to go into detail here, but I'm pretty sure that most of you watching this are aware about all the positive effects of working out. And regular exercise in combination with daily meditation has a huge positive impact on my trading performance. I can literally plot the habit tracker that I have for meditation and workout with my equity curve, and they will almost move in an uptrend with each other. And you want to make sure that your office or your trading space is a positive work environment. And you want to set it up in a way that helps you achieve that positive state of mind. Now, it's crucial for you to be able to tap into that flow state of mind. And I make sure to really, clean out all my office, from all the distractions and unnecessary things on a weekly basis. And because I think it's very important to find the balance and find the focus when trading and not have too many things distracting you. And for me, again, when it comes to like managing, not letting the guard down, when I talk about being on the lookout for mental errors, it's very important that you learn how to identify your emotions. So now, I previously said that stress is one of my biggest enemies in trading. So I will have to very carefully monitor my emotions for any sign of stress. So it took a long time to be able to identify these emotions, in detail, and especially the signs leading up to them. But today I have a few notes on my screens, right? So I have one note which says, identify your emotions, like big caps, like it's right here. Every time I'm going to enter a position MT4, I read identify your emotions. And below that, it's a text that says, if you feel stressed or unsure about the setup, go out for a walk or meditate for 10 minutes. When I follow that, it works every single time, right? So my best trades are the ones taken while I'm in a completely calm and calm state of mind, and I'm sure about entering the trade. If there's any uncomfortable feelings of signs of stress, I usually just let the trade go and wait for the next one. Now, because these signs might also be signs of me needing to take a break. Let's see. Yeah. So again, reset that emotional scale, that balance scale, and so you have to to function from a probabilistic mindset. You have to be able to forget about the previous experience of the previous trade. Now, this can be, of course, very difficult at times when you're trading a lot, and especially if you like trading crypto and you're trading on the weekends as well. So your mind really do need to take regular breaks to reset your mind from that past experience and only focus on the next trade with a probabilistic mindset. So it's absolutely crucial that you it's absolutely crucial that you understand that the next trade has a completely random outcome. The last thing I want to talk about, which is not talked about a lot from a trading psychology point of view, but that is backtesting. So now what I do is I do regular backtesting session. And you might hear me talk about this a lot. You know, I'm very invested in my backtesting. I think it's a highly valuable tool to strengthen your mental state of mind as well. So I mean, you're 100% certain to go through drawdown periods. You're all going to experience those. Some more than others. And during these drawdown periods, it's very easy to lose confidence in yourself as a trader and the trading system that you're using. So by regularly having these backtesting sessions, you remind yourself of the profitability and the possibilities of your system. And this will make it much easier for you to think long-term and trust the long-term process and focused on the next individual trade. And you can reaffirm that the drawdown that you are in is absolutely normal and natural in your trading system. All right, that's it. That's the presentation on trading psychology. Any questions? I know it's been quite a long live stream today, so let me know if you guys do have any questions, and I'm only going to be spending a couple of minutes on that. But I do really appreciate all the comments in here. I do see lots of good comments, and I am very happy to see that you appreciate this discussion.
I don't want to say it. Have you checked gold?
I think you did a great job, Jonathan, because you just in a few minutes
remember that
in a few minutes
yeah.
Oh,
in a few minutes you managed to pack a large amount of wisdom, and it must be difficult because you mentioned so many things that are so important in trading, that I without and of course you couldn't go into the details, but I mean, I was agreeing like constantly what I was hearing.
Why are
That's
you
a
laughing,
great
Alex?
presentation.
Like it's trying to.
Because Victor is giving you so many compliments, and you are just like, "Oh God, I'm doubled in gold. It's near my stop loss, and I'm twice in." And it's just the face like, "Oh God, I was in so much profit, and it just has all gone to mess." It's just funny, man. It is funny. It's just how it's just typical, isn't it? Because it's like the trade you closed was the good trade. The close, and it's just that is just what everything happened. That's just what happens,
Yeah,
it's just such a
definitely.
It's just such a typical trader thing. Is like the one that you close is the one that went to take profit, and the one that kept open is the one that goes to your stop loss. It's like it's just one of them, and it's
I mean,
it was just funny because Victor was giving you like some really nice compliments because it was a really good presentation, and in the background I'm just like, I can't wait till he sees what gold is doing.
Yeah, no, thank you, Victor. I do really appreciate that. Also, look at EU. I closed this one as well. I closed it up here. Where was my TP? Well, of course it was down here.
That one that's a fair place to get out of.
Yeah.
It did go down 100 pips. There's a part where you can say, okay, 100 pips. Am I really going to push it for 130? It's like,
yeah.
On a day trade, not It's like one of those.
Well,
things.
to be fair, the gold trade is still open. Let's see.
If that comes down now, you are probably the luckiest man in the world.
Yeah, I'm probably going to close it anyway, and then it comes down.
It's typical. Do you want me to get? I'll get the giveaway sorted.
Yeah, man.
I have. I'll put a bit of music on. Just.
If you did enjoy that, make sure you you hit the like. You hit the like on the YouTube. Where can I get the audiobook that you mentioned? It's called Trading in the Zone by Mark Douglas. It's I know it's available on Audible. Probably just put in the. We'll find it. It's on, I think it's on Spotify as well.
Oh, we got to do it. We got to do the thing with the gleam, isn't it? Oh god, it took me ages yesterday to sort that out.
Yeah.
Okay. Wow. Do you reckon we have more trades in the London stage or in the London zone?
It varies.
What am I talking about? Yeah, because sometimes it does happen. We have quite a few trades in London, then we don't have any trades, and then we have a lot of trades in between London and New York. So I don't really know.
Yeah, for me it varies. Sometimes I have periods where London is the session I should be trading, and other times there's nothing happening, or only gets stopped out, and everything happens in New York, and I can't get a reading of what to do there. I just trade them both.
I might
if I can.
Jonathan, do you want to just send me the code, the secret code,
Yep.
or I could just write a random one.
The code, so let me.
I'll just.
All right.
I'll just do one.
Gold stopped me out. I was gonna do gold dump now, but obviously that it doesn't matter. Okay. The secret code is going to be really
1, 2, 3, 4, 5, 6.
Oh, okay.
You know, sometimes you just gotta keep it simple. You know, just keep it simple. You know, we've had a good day
I think
today.
Alex is a bit in a hurry.
In the zone.
Nah, in the zone. I am in the zone.
Yeah, he's in the zone.
Let me sort out
right.
the 30 bonus. Everybody that has been, you get 30 entries if you've been to 10 previous giveaways. Now, if you've been to
I gotta fix the chat. Yeah, okay.
50 giveaways, you're going to get you're going to get 100. Now 50 bonus entries. No. Oh.
Yeah, link. We need the link.
Yep, sorting it out now. I'm sorting out the loyalty thing because that wasn't working yesterday, and I'm sorting that out for you guys now. I've added another one as well because I know there are some proper OGs here. And if you've been here for 30 times or more, then you're going to get even more bigger chance to do it.
I'm going to be doing lots of journaling today.
Mate, I can't get the. Maybe it's something to do with Mac, but I can't get Edgewonk automatically to
upload.
Uploads, yeah, it's super annoying. Gold's coming back down. What is going on?
There's medium news from there's the bank's statement for the rate decision, Bank of Canada, coming out in 3 minutes.
we gotta.
Who's playing? Who's playing with the thing?
I'm trying to set it up so that I actually.
What is Victor? What's coming out?
There's a press conference on the Bank of Canada, after the rate decision, like half an hour or
Ooh,
sometime
let's have a
after
look.
the decision. But it's medium news, and it's press conference, so it's not like one
I'm posting
single.
the link in the comments. You got the comment in the chat. Link in the chat.
With
I'm gonna
press
pin it as
conference,
soon
it's the move doesn't come like in a specific time, but it can be minutes after. But it's on my effects, it's put down as a medium impact, but actually on Forex Factory, it's high impact news. So I don't know which of the two it is.
I have no idea that dude is.
If you know who he is, then you got a problem. I don't know who he is.
Yeah, I have no idea who that dude is.
Who is
No
that
idea.
dude?
Yeah, I don't know.
know.
Like, is he a member
don't
of the
know.
Fed, the Fed chair, FOMC? Because he
Yeah, I
does
think
screw the market quite a
he
lot,
runs. I think he does. He's he worked with that Powell guy. Yeah, something in something to do with
I
that.
see. I'm gonna
Link is not
Google real
working.
quick.
You're gonna Google what? What are you gonna Google?
That FOMC share member we talked about.
Yeah, you Google that, but make sure you turn your mic off. All right.
All right. Link should be working.
Yeah, link's working. We had a good morning, guys, except for the last part.
Yeah,
We had a good
absolutely.
morning.
It's I've made
decent gains today.
Actually, I made back what I lost before.
Yeah, that's wicked.
wanna-
How much were you down, Victor?
I was down 9R. Actually, yeah,
Ooh.
about 10R. That was on the 8th. Now I'm checking my stats. So that was on Monday. Remember the one I took, the losses I took
Yeah.
During the streams. And today I had almost 20R in profit. I was.
Yeah.
So now I'm it says here 8 almost 8R in profit, but I think it was I think it was a little deeper in the red. I think 11 something on Monday. And this is me closing it way before the target. At the target, I should have made today almost 50R, divided in different pairs, different positions, I mean. So I would have been up a lot more, perhaps like 38, 39. But this is good enough for me. I mean, I'm back in profit. It's good profit. It's 8R on the week, and we're only on Wednesday. So yeah, I'm very pleased with the results.
Guys, nobody wins more than once. So I don't know where Aid, I don't know where you got that from.
So far, the April results are very good. I think this
Nice.
is
very nice.
Today I'm up 5.6R. So on total in April I'm up 5.6 with a win rate of.
Do you have to when you do an edge run, do you put what R you normally have, and that's why it comes up with the R? So if you put like a R is like 1%, it would automatically say. Is that how it does it?
No,
or is it automatic?
it's the actual risk to reward of the trades.
Oh,
so
nice.
the return in percentage
Nice.
could look very different, right? But what I'm focused on is what's the actual return on risk, because right now I'm always risking the same, and then perhaps end of this week. Yeah, so probably end of this week I will double risk. So right now I'm only risking $100 per trade, right? And then if this continues, I'll increase my risk to $200 per trade, and with the goal of with a win rate like this and a profit factor of like this is this is just a good period. Like this is winning period, right? So I'm not gonna have like I'm not gonna have 2.22 and a win rate of 57 long term, right? So I'm thinking I wanna have a risk per trade where I'm like almost like the way Victor is calculating it when he takes like 1% of the drawdown, so that he like it's almost impossible for him to go into drawdown and lose the account. Like when I'm the way I'm risking normally is like if I do have a long losing streak and a drawdown period, I actually run the risk of losing the account, and I want to minimize that risk and risk very small.
Yeah.
Um,
Regarding this, Frank, yesterday after I did a retake of Frank. So Frank only got one account, guys. So it is as fair as we can do it. We are doing it as fair. Each person gets as much chance as the other. You know, we're not trying to pull one over on anyone. Everybody gets a chance. Frank R only got one account. Somebody else got it. Gosh. Anyway,
I'm up 14R for the month, but even though it sounds a lot and more than
I need
yours,
to check.
Jonathan, we have to, in order to compare the R between you and I, my day of, for example, a losing day might be -10, so that 14 isn't that big
It's
when you
break even.
consider.
Yeah.
Well, it's a little bit more than my drawdown that I had just only Monday. So it isn't that great. But the month is I was in a little bit of a drawdown, but yeah, I'm up 14R.
Yeah, that's a very good point that you're because my max drawdown per day would be 2R. So I think
There you
it's
go.
very good to take. It's very good to have that comparison, because when you say like, yeah, you can have a a down day of like 10 or higher. Like if I have a day of 10R, I'm quitting. So it's just a difference between between approaches to risk.
Actually, to be able to compare two different systems to each other, you shouldn't compare the profits, but or I mean the returns just like that. You have to compare them returned adjusted by the risk that was taken, and in
Yeah, so
my case,
it's called like
I take a
drawdown
lot more
adjusted or something like that, right? Or risk adjusted.
risk adjusted returns. Yeah,
Yeah.
you have to compare risk adjusted returns, and in my case, for you to do that, for example, would be, in my case, it would be 14 divided by the maximum drawdown in that period, which is in this case like 11. So my risk adjusted return is 1.3, the maximum drawdown, and that gives you a much better um, representation of how much that return is when you link it to the drawdown it had. And when you do that with yours, if let's assume your drawdown was perhaps 3 or 2, you're having a much higher risk adjusted return compared to mine.
Yeah.
Okay, I'm gonna get this set up. Wow, we had so many. I've got to reply to all the emails yesterday, guys. I know for the winners yesterday, you sent me some really, really good feedback. I do want to get back to you all, and definitely, because you gave us some really good things to think about, and also some really nice compliments. So I do appreciate everybody that gave us some things to think about.
Yeah, let us know. Sorry, I was muted there, but let us know in the comments if you like the structure that we had here, because basically the structure that we had today is slightly different. Today we had two segments where first, of course, we had live trading in the CPI, and then Victor talked about his system, and then we talked about trading psychology. So the way we're moving forward is we're going to, we're going to bring in lots of people, not lots of people, but we're going to bring in content from the Discord community as well. So people in the Discord will be able to ask us questions and post setups, and we'll be able to break that down very nicely for you guys. So when you join every live trading room, you'll make sure that you can make sure that you're always going to get a lot of educational value, not only live trading. So part's going to be live trading, then part's going to be education. Right. Yep. So
let's do it. Okay, I'll pull it up on the screen. I don't know. People are saying the loyalty thing is not working. It's working. I'm seeing people get it. So 14. We're putting 14 people today, since we've got 700 likes. Here we go.
Nice.
Well, before we do that, obviously, it's not going to be
Good
the
luck
same.
to everyone. This can be a great opportunity for those winners.
Yep, big time. There you go, guys.
Well, probably not the best there.
Jonathan, do you want to just go through and just read everybody's name? Can you see them?
All right. Yeah. It's
yep.
Do you want me to read them out loud?
No, I'm joking, mate. I'm joking. Like, okay. I was just because it's very far away, you can't see it. I was only joking. But yeah, guys, those are all the names. Everybody's going to be getting emails from me, and you will have your account. Yeah. Thank you very much for joining us.
Thank you for joining, and thank you, Alex, for being here, and thank you, Victor, for doing your presentation, and thank you, me, for doing my presentation, and thank you, everyone, for being here. And it's Wednesday, which it's sad news, because
you pulled your trade
because we're back on Monday. But the sad news is the last live stream of the week, which is sad. But then we're back on Monday, so it's good news,
Oh my God, this deserves a rain reaction.
But this doesn't mean that the live trading and the community aspect of this disappears for days. We're still in the Discord, and are we going over to Discord after this?
You
can't.
I can't. I've got to try and. But yeah, I can't. I won't be here.
All right. But Victor, you're going over to the after show.
Yes, I am.
I'm going to be in the background. And because I had the kids upstairs and they're going nuts. So yeah, I'm going to be in the background to make sure that
I'll miss you guys.
All right, guys.
Okay, so yeah, somebody wait before we turn. Somebody said that they can see, and it's just so you can see that I can change it. And this is what we did yesterday. I can just do repick winner, and there you go. You've got Abdul. But I do check it. Anyway, guys, thank you.
Yeah, so Alex is actually very, very strict with making sure that there's no, double winner and things like that. All right, guys, see you all on Monday. Take care, everyone, and thank you for joining us this week. Take care.
Bye-bye, everyone.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at The 5ers. We'll see you in the